Good morning, Rick.
Hey, good morning, Megan. How you doing?
Good, good. Thanks for meeting with me again. And
Yeah, sure. It's great to be here.
I know I'm glad that we did our video last week, and I had a
Right.
lot of positive feedback from it, and
Good.
people really
Excellent.
appreciate the information. So we're
Good.
gonna
Good to
do it
hear.
every
Thank you.
Tuesday. You and I are gonna
All
chat
right.
at 10 a.m. and you're gonna kind of give us an update because what I do selling houses is completely different than what you do in providing
Right.
a mortgage loan, and I lean
Mm-hmm.
on you to keep me posted. And I think people with the stock market and with housing that they're really interested to know what's going on. So last week I forwarded you an email I had gotten from someone. It was really long
Right.
and it had a lot of
Was.
information.
Yep.
And I don't trust everything that I hear or see or
Mm-hmm.
read. So as
Mm-hmm.
usual, I forwarded it to you and I said, "What is this?" And you said,
I know, right?
"We'll chat about
It's
it."
a lot
So
going
tell me,
on. Yeah.
give us the inside scoop. What's going on this week?
Yeah. Yeah. Thanks, Megan. Great to be here. So thank you. So look, here's the deal. Rates dropped. We talked about this a bit last week. Rates dropped. There was no market to buy those mortgages. Rates spiked up really about 1% in about a 4 or 5 day period. That is really not good for the market either. So thanks to Chairman Powell of the Fed, he came in and said, "Look, we're going to buy that excess mortgage-backed securities, and so that's going to make that market more liquid to keep the rates low." So the good news is they came in. The Feds over a period of about a week purchased almost. You ready for this number? Almost $200 billion in
Wow.
mortgage-backed securities.
Wow.
That's how much was out there that was not being purchased, and that's why rates were spiking up.
That's
Okay,
right.
so that's great news for the market. And the great news is that last week the rates went back down to where they were, say, 2 weeks ago. So
Good.
these rates are so low, it's amazing. However, what happened is result of this Fed purchases, what the market wasn't expecting, is that on the back end of mortgages, there's a value of that loan servicing. Okay,
Mhm.
and so loan servicers expect the loan to be in the books about 3 years to break even on that. Okay,
Mhm.
so with all that volume going out into the market and all that they call it runoff in the mortgage business, so all that loan servicing that has a value that creates cash flow for lenders, that's all being run off and being refinanced by other lenders. So they're losing that value. So the
Mm.
impact of that is that for mortgage companies, that loan servicing has a value on their balance sheet. That's all
Mhm.
going away, right? And so that creates a situation where in the mortgage market where that value of that servicing shrinks, where it's
Mhm.
almost worthless. Okay.
Mhm.
And so the only way to bring that servicing back to some sort of value is, guess what? Raise the rates a little bit.
Right.
So we went from a crisis of being not enough liquidity in the market. The market was not liquid at all. The flip side of that is that the loan services are now getting margin calls and unable to sustain that business.
Wow.
So now the feds have come in. Now the next piece of that Fed move is to rescue the loan servicers. They're
Right.
come in and shore up their business to keep their business solvent. So the
Mhm.
Feds are really doing two things. They're buying up mortgage-backed securities, and they're also keeping loan servicers solvent. So the Feds are putting a lot of money back into the market to keep the market healthy. So I got to
Mhm.
give a lot of credit to the Fed movement right now. That's keeping this market active and sustainable, and that's the good news.
Yeah,
But
that was
but bear
sort
in
of
mind,
the Go ahead.
yeah, no, go ahead.
No, I was going to say that was sort of the unintended consequence of the first
Exactly.
the first rescue. It was like, whoops, there's a whole nother portion of this business, and
Right.
that's servicing these loans. So
Correct.
you said they have to service them for about 3 years in order for
To
everything to
break
sort of
even.
pencil out. Yeah. Yeah.
Right. So that's not happening right now. So the value of their servicing is shrinking quite a bit. So that's creating a lot of cash issues for some of the big mortgage services that are out there. So just be mindful of what's going on, the dynamics of how the market works on both sides of that. But what's going to happen eventually here is we're going to get into a fairly normal trading range with respect to mortgage-backed securities. Because right now the markets are very volatile. We're seeing still yesterday, we saw a 97 basis point swing yesterday
Oh
in the
my gosh.
mortgage-backed securities. A typical day, up plus or minus, is 10, 15 basis points. That's a
Yeah.
typical day. So you see a 97 basis point swing, that means there's still a lot of, still a very volatile market. So as
Mhm.
this starts to settle down a little bit, we're starts getting into a more of a normal trading range where you won't get those dramatic swings in the market. that will
Mm-hmm.
also be very good for rates long term.
Mm-hmm. Uh-oh. Okay, our video cut out for a second, but you were just talking about the basis points and the big swings in the market.
Right. So we're gonna go back to more of a normal trading range. That's also good for rates. So I think, in the short term, I'm really bullish on mortgage rates. I think we'll stay in a fairly low rate environment here for the next couple 3 months at least.
Mm-hmm.
So as the market settles down, the Feds maintain their buying of mortgage-backed securities to keep the markets really solvent. I still think there's room here for some growth, if you will, and
Mm-hmm.
some more stability in the markets. So, but
Mm-hmm.
just be mindful, the markets and day to day can be very volatile, of course. But I think in the long run, I think we're going to be really pretty good.
So when is the Fed expected to prop up the servicer market? Did that already happen, or is it happening this week? Or
It's starting to happen right now. I think as
mm-hmm.
soon as that happens, we'll get some more of that stability. I mean, the Feds are actually moving pretty quick on these items. They
Mm-hmm.
really understand how this impacts the economy overall.
That's right.
So I think we'll be fine. I really do. I mean, there's going to be some short-term pain. I mean, frankly, there's some mortgage companies that will not survive this. They don't have the cash or the capital, if you will, to sustain the margin calls and the crunch on their assets, because on their warehouse lines where they fund loans, as that market becomes tighter, the warehouse lenders actually tighten down and cut their warehouse lines.
Mm-hmm.
So those types of lenders are going to have a really hard time, staying in business. But that's okay. I mean, that's just nature of the business sometimes. But
That's right.
overall, it's going to be very good.
Mm-hmm. Mm-hmm. Well, good. Well, we'll
Problem.
tune in next week. We'll see how things are going. What are the rates like today? I know it's early still, but
Yeah, rates are for the most part, under 3.5%. I mean, depending
that's
upon
great.
the type of loan. Price loans are steady at 3.25%, and some loans have paid some closing costs.
Right.
So at that level, we're really good. So I think as we recover from this pandemic, if you will, rates will stay very good and low. And I really encourage buyers, if they, in the market, that we can actually process a loan right now to a complete loan approval before they find a house.
Yeah, you know
So
how much I love that. It's like, even if you're not gonna, if you're gonna buy when this is over, which a lot of people are putting it off until it's over, totally
right, sure,
understandable, because
understood, right,
it's hard to make an offer on a house without having real access to it. So there's challenges,
right,
but things are still moving. I mean,
right,
sales are down. I think as of right now, it was like 14%. So there's people that still have to move, and there's people that still
right,
have to buy. So things are still
right,
moving. But yeah, I think if someone plans on buying when this is over, in a few months, they still want to get moving during the summer while, when they want to register their kids for school or whatever their motivation is,
mm-hmm.
that I would strongly encourage them, while they're having some downtime, while they're at home, to number one, get their taxes wrapped up,
Right, for
and
sure,
send that information to their accountant, because this is the time of year where you really do need to get those tax returns typically.
right,
But
right,
to get approved for a loan, and you have that program which is so helpful, where you have the seller guarantee, and when I've
right,
been in multiple offer situations, that's been really helpful. So what it is, guys, is it's a certificate after you get completely approved that Rick
right,
will provide, that promises the seller that if they can't close the loan, they'll give the seller a $2,500 payment. But I
right,
mean, you plan on closing the loan after you get approval like that.
right,
But it is helpful, because when things do come back, in a few months, with the interest rates low, and this demand is not going to go away.
correct,
It's a
right,
pent up demand, and so it's going to be very
right,
competitive. So now's a good time for
right.
people to get all their paperwork in order.
Yeah, as I say all the time, really, it's about being positioned, get in the right position to move forward when that time is ready, when that time is ready to go. So
And I
you have a
love when
fully
people,
underwriting and approved loan.
yeah, I love when people do that before they find a house. It's
Right,
just, when they can be real logical about things.
Right.
So, all right.
Yep.
Well, I
That's
appreciate your
exactly the
time
way to
this
go.
morning,
Yeah.
and
Thanks, Megan.
we'll get caught up, and I'll see you again next week.
Hey, thanks. Have a good week. Take
All right,
care.
you too. Be
See you
healthy.
later. Alrighty.
Bye.
You too. Bye bye.